Hey everybody, welcome back to another episode of Real Estate Served on the Rocks. My name is Charlie Sardelli and I'm here with
Jameson Amaros,
Oscar Ibarra.
And we are three Colorado-based realtors with Fathom Realty. And we do this podcast every week specifically to bring you, the consumer, valuable information on the Colorado real estate market and how you can best capitalize on what's going on in today's market, right? Mm-hmm. We also love to review bourbons every week. So we've had up to, 21 different bourbons
21
now?
different bourbons, yep.
So if you're a bourbon drinker, this podcast is not only about real estate, but it's about bourbon too. So feel free to enjoy it. We drop our audio episodes every Friday. And between Monday and Wednesday on YouTube, you can catch the video episode.
Yep.
Today's topic that we're talking about is actually going to be pretty timely. We're going to be covering some inventive financing options that you have, different ways that you
Creative financing.
Yep, creative financing. Different ways that you can kind of capitalize on your loan options, right? And with us today, we have, again, our in-home lender here, Colin Keenan.
Hello. How you guys
Welcome
doing?
back, bud. Welcome back. You ready?
Thanks for having me. Yeah, I'm definitely ready.
It's going to be fun.
He has the most exciting voice in the world.
Yeah.
But guys, make sure you like, follow, subscribe to the YouTube channel, Living in Denver, The Mile High Perspective.
Living in Colorado, The Mile High Perspective. Like I said, episodes every week, and we love to have fun. So come on over, enjoy the time with us.
Yeah,
and I think today, just to give you guys a structure of what we're going to be talking about, we brought Colin on because he is a loan officer. He's local here to Colorado, based technically out of the Tech Center, at the Denver Tech Center, right, with New American Funding. I'll let him introduce himself in a minute. But to give you guys an idea, we're going to go over four main topics today. Mm-hmm. The first one's going to be assumable loans. The second one is going to be bridge loans. We've also going to go over bank statement loans, and then finally seller financing, all four of which we've seen an uptick in as far as interest because of how wonky the market's been. So,
and when we talk about creative financing, obviously there was trouble back in 2008 because of quote-unquote creative financing. This is not what this is. This is other structures on how to purchase a home without the crazy risks that you had back then.
And the reason we brought Colin in today is because he is the lender. He is the guy that does this for a living. And we wanted to get you guys the best information straight from the source yet again. So Colin, go ahead, give us some a background on you.
Where did you come from?
I came from Earth. Salutations. My name is Colin Keenan. I'm with New American Funding. I know some things, and therefore I decided I want to be a lender and tell some people some of the things that I do know.
I like cryptic. I like it. It's nice.
Yeah.
It's good stuff. That's
Easy,
good stuff.
easy Lannister.
Yeah.
I drink and I know some things.
I was going to take that route, but I decided, I just know things.
I drink and I lend things.
I like things. I like it.
There it is.
Nice. Well, guys, today during this topic, we have honestly a really, really fine bourbon for you. This one, I'm going to go ahead and let Oscar take over and just describe what it is, what the notes are looking for, and then I'm going to come in and give you guys some history about the distillery.
Oscar, you talk, I pour.
Yes, so this is High West Double Rye. It's a rye whiskey. Double rye because they blend two different ryes. One is a 95% rye and 5% barley malt from MGP. It's a distillery. There's a few major distillers, right, that you go and buy. Different distilleries go and acquire barrels from. MGP is one of the bigger ones. And then they also do an 80% rye, 20% malt rye from High West. So they're out of Park City, Utah. They're one of the only, if not the only, ski-in distillery, gastronomy, so they serve food. Mm-hmm. The notes are going to be rice spice, cinnamon, ginger snaps, ginger mint or juniper mint sprigs, and wildflower honey.
Sounds like a charcuterie board.
Right.
46% ABV, alcohol by volume, and 92 proof.
Okay.
Aged at least 2 years.
So that, I like, thanks for bringing up the 2-year thing because guys, don't forget that brown bag bourbon episode that we did, the ancient age and the benchmark were both 3 years, 36 month. So I'm very interested to see what this one's looking like.
One
at
day
just
we'll
2
stop
years.
talking about that bourbon.
I
One
thought
day,
we
one day.
agreed
Sorry.
that we weren't
I
going
thought
to
we
bring
talked
that up
about
again.
I thought that we put that in the box, locked it, and then threw away the key.
You
We're
know,
not-
you got to remember where you came from. You know, what your highs and your
that's the
lows.
problem. I don't remember where I came from after drinking that bourbon.
Well, and,
You bring it up, it makes me want to gag a little bit.
No,
and as you guys know, one thing that we love to do,
Colin lucked
especially
out on that episode. He
Oh.
wasn't here.
one thing that we love to do with our bourbon, especially when we do find a story that's really cool, is we like to kind of just tell you a little bit about the background of it, right?
Yep.
So what's really cool about this one is it kind of has a Breaking Bad story to it. You know, it's so there's a family, and their names are the Perkins, and they
Great breakfast.
right. Yeah.
Not that family.
So they actually decided to open the distillery after the husband went to Kentucky and saw a distillery making bourbon. Lo and behold, he was a biochemist, and so he was like, you know what, I could do that. I know how to do that. That seems pretty cool, and that actually plays into the thought of you have somebody who actually knows chemistry doing it, and now we have this for 2 years, only 2 years. So that it'll be interesting to see what his knowledge there added into this. It only being 2 years.
So I'm gonna have to go back to the episode where we did Uncle Nearest, but I want to say there was another bourbon that we tasted that the head distiller was also a biochemical.
Yep.
Had her master's degree in biochemistry.
Yep.
And I want to say it was Uncle Nearest was
Yeah.
that one, and it turned out
It was
fantastic.
phenomenal.
So
I mean, I'm really excited to honestly let this one sit a little bit and then take the sip on it. But what's really cool about this bourbon in particular and the Perkins is they were in 2006 when they established High West Distillery. They were the first distillery to open in Utah since 1870.
yeah, they got some tough rules out there.
Oh yeah, it's dry.
Right?
And
Right?
it's hard to purchase alcohol
Not just
from
the humor,
Utah.
but
Yeah.
just the state's
Yeah,
And
dry.
what's really cool about it, like Oscar was saying, is it is actually the only ski-in gastro distillery in the world. So you can go skiing, and then, like Oscar said, get some food, go get some bourbon, and in that saloon, they actually have a flight of all 4 of their distilled spirits,
And
so you can try all 4.
they recently opened a ranch, a bigger facility.
Yeah.
And they're the only dude ranch distillery too.
That's cool.
Is
So
that
you go
in
visit in
also?
Utah. Yeah.
We're gonna
In
have
Park
to
City,
drive
right?
out.
Outside of Park City.
Just
That's
a
what
bunch
it
of
The dude ranch
dudes
is out
on
there,
the
so you
ranch.
could go visit them, do the dude ranch, or just go.
Have you guys been to Park City before?
No.
Dude, it
I've only
is-
been to Utah at Lake Powell. That's
It
it.
is so beautiful. Like it is a very, very, very cool city
Nice.
to go through. It reminds it's like a Rocky Mountain town,
Yeah.
but because the elevation gain difference between where the town is and where the mountains are, it looks even more impressive.
Okay. So it's almost like that shot of Sweden that you see where it's like the little town and then it's towering
exactly.
mountains
Yes,
behind it.
Yeah, the closest
Okay.
that I can think of is like Telluride.
Okay.
Has there been a Telluride? It's very, very similar, but yeah, beautiful drive-in. Yeah, Utah's a cool state. It's
Very
beautiful.
cool.
Yeah.
Well, and with
Can't drink there, so this podcast would be terrible. But
another cool thing about
Just
the
not
bourbon
on
is
Sundays.
they, like I
you guys
said,
want to
they
move here,
started.
let us know.
They
From
started
Utah.
in 2006, and within about a decade, I think it was 2016. Yeah, in a decade, starting in 2006, they were awarded Distiller of the Year by Whiskey Advocate magazine. So, took them only 10 years to get that distinction, and that between the biochemistry, the actual notes that it's saying, and the fact that they accomplished that so fast, I'm really excited to try this.
Biochemistry. You guys shout out to all the chemists out there.
Yeah.
My wife's grandfather was a chemical engineer,
Nice.
and when he passed away, it read, "Chemical engineers don't die; they just fail to react."
That's
That
awesome.
was super
That's a
cool.
good one.
I was like, "That's the way to go."
That's a really good one.
So I have watched a movie once or twice, and I'm really banking on getting super strength after this.
Yeah, right.
Based off some biochemical, maybe
Bourbon,
design.
right.
Colin's thinking about the Hulk over here with gamma radiation.
Yeah, I just want to be stronger. That's it.
I want my hip to feel better.
Gosh, why does it hurt all the time?
Welcome to Getting Older, everybody.
Says the 2 youngest guys in the
I was gonna
podcast.
say.
Hey,
They're still in their 20s. Jeez.
Hey, man, I've said it in the past. I was overweight. I was a catcher in baseball. My knees are going, man.
Yeah.
I turned 30
Oh, catcher's
this
tough.
year.
I played baseball my whole life. I was third base. I tried it once. I was like, this
My
ain't for
knees
me.
are snapping. I don't know. They're making certain
That's a tough
noises when
gig,
I get out of
catcher.
bed. And stuff
Really,
now. It's
what
just
Charlie's trying to say is the 2 youngest guys just work harder than.
Oh, Dude, let's not get into that. My
Okay,
generation back breaking.
Hey, get up right now and do a jumping jack. Just one.
Actually, this is hard by itself. So
All right, so it's been sitting open for a little bit now. I'm gonna go ahead and take those first sips, see if those notes are true. I mean, especially just on the nose when you're smelling it, you definitely get that cinnamon. A lot more of the floral than cinnamon for sure. Yep.
damn, Daniel.
It's good.
The burn lingers. It doesn't taste what I would expect a rye to taste like.
Sweeter than a double rye.
Well, and
Yeah.
the honey notes are very predominant
Yes.
for being a rye. Ryes are spicy, right?
See, and again, already within the first sip, we're already seeing why the biochemistry makes a difference. Because if you think about it, the rye, as we always say, is dry, right? Is a little bit more less palatable because of how dry it is. Now you just add that natural honey in, and the sugar's going to complement it.
Yeah.
Yeah.
Yeah, I do
That's
the
awesome.
Chattanooga chew when you're drinking
Ah.
it.
I do see
It
that.
opens up
I
a
think
bit.
You,
Try it.
Oscar, you said that one of the first things
dentists
they
would not
mentioned
like that.
is you have to try it in an old fashioned. I could see that.
Yeah.
Yeah, and the description says it
Yeah.
blends well, and some of my favorite old fashions are done with rice.
Well, and it's
I expected it to be drier.
yeah, well, 100%. It's definitely. I think what you're talking about with the heat lingering. I think that's definitely the dry of the rye hanging on, but that front end is so sweet with the honey and the cinnamon. But then you definitely get the botanical at the back end. If you've ever had like sweet tea or any kind, like a Lipton tea, stuff like that, that's kind of the flavor and the progression of the taste that I get.
Yep.
Well, and because it's juniper, it kind of lends itself kind of like a sweet gin. Mm-hmm. If you ever had a gin and tonic, it's like really sweet.
That's a
because
really
the
good
tonic is sweeter and the gin is as well.
Yep.
Yeah.
So it's kind of a gin and tonic-y blend in there.
Yeah, absolutely. Colin, what are you thinking?
I'm a big fan, and I am very uncultured, so I just go basically thumbs up, thumbs down, and this is getting 2 thumbs up for me.
Okay.
For the double rye, double thumbs.
For the
Yeah.
double rye, double thumb.
Yeah,
I like it.
One thumb per rye.
Try
That's
to keep
awesome.
it on,
That's what I like
par.
about Colin. He pre-games it with the Coors Light.
Yeah.
That's
Yeah,
right. That's
exactly.
right.
Damn
That's
right.
good stuff. That's good stuff. Well, let's go ahead and get into the topic for today, guys. Colin, thank you so much for coming to join us.
Yeah,
and
thanks for
giving
being
us
here,
this
Colin.
Insider information, because in all honesty, with all the headlines that we're seeing, all the mortgage rates are on demand and interest rates going up, going down. It's really good for people to know this information and have this in their back pocket. So how we're going to kind of structure this out is we're just going to ask Colin to explain kind of what, why, and then some pros and cons. So Jameson, I'm going to go ahead and let you take it off.
Yeah, so I think the first one we want to talk about is assumable loans. And this is an interesting one because on the surface, they seem fantastic, right? Like, why would you not want to assume a loan at 3.25% versus going and getting a new loan at what the rates were today, which is 4.19. We're at a 6.75-ish.
Yeah.
So we've actually had a bad week over the last week. We've gone
Compared
up
to the last three.
compared to the last 3 weeks. So on the surface, it seemed great. I think there's pros and cons. Colin's going to go through a couple of things that we'll ask as far as what qualifies as assumable loan, so on and so forth. But if you guys watched our episode around VA loans, it's a cool tie-in because VA loans can be something that is assumable. So Colin, first off, kind of give us like what is an assumable loan in the most plain terms for anybody out there?
An assumable loan is a loan that somebody already has on a property that you would be going and taking over their existing loan and putting it into your name and taking them off the financing. So
And by doing that, what rate do they get?
whatever the rate is. So you're taking over all the terms, where it's left at, however many years it's still termed, and you are literally assuming the existing loan on the property.
Which
So-
this is probably one of the loans that you have to be in sync with the realtor.
Yeah.
Because you're assuming, say the purchase price is $700,000 and they owe $4,000, so you're assuming just the $4,000. So the client has to come in with the remaining balance
Right. Yeah.
as a down payment. So it all has to make sense, and you have to structure it realtor and lender.
Yeah, no, and that's a huge part. Like understanding, having a good relationship with your realtor to understand like what you can do, how much you've got into this. the possibility of even looking at something like this, because how an assumable loan works based off that is if the loan's at $400,000 and they're trying to sell the house at $700,000, you have to come up with that $300,000 in one of two ways. Either A, you have to bring it up with funds to close, or B, you have to get a second loan. And the tough part about getting a second loan is not a lot of lenders are willing to be in second position to whatever that first is. So you'd have a difficult time finding somebody that would be willing to do that.
That's a great question. I was going to ask that. Like if it is somebody that wants to assume, but they don't have $300,000 from the sale of their house, or they don't have $300,000 to cover that difference, can they get a second loan? So the answer is yes.
Right.
But it's either A, because they're in second position, they're going to probably want a higher interest rate, in which case now it's a math game, right?
Yeah,
if it even
to
makes
qualify.
sense.
Seconds are usually higher.
Yep. Or
Right.
B, they have to come with cash and they can't do it.
Right.
And
Yeah.
the thing is, right now, if you could find a house that has a lower interest rate and assume it, if you're upsizing and you have equity in your home, that's definitely something to hunt for on the real estate
Yep.
side.
Well-
and a lot of agents don't promote that on the listing side. Hey, they have an assumable loan at 3.5%. If you have the client that has an extra 300,000 that are just going to transfer equity over, that's a great opportunity.
Oh, yeah.
Phenomenal opportunity right now
Yeah.
because it's half the interest rate.
Well, and that's what I was going to say too, and that's where Jameson touched on it earlier, is that assumable loans are now coming up. You see the word coming up and the term coming up even more now, but that's because what we've seen in the last 2 years is something that's really unprecedented, where rates were down at 3, and then they just doubled pretty much to like we said, 6.75.
Yeah.
So now it's so much more relevant because you have everybody who bought through the pandemic when these interest rates were being held low, and let's be honest, a lot of people bought, we've talked about how it was a great time to invest, but if someone is now under on that and they need to get out, it's a great option for not only the seller, but also the buyer, because now you're cutting your interest rate down in half, basically, because you can assume what it was 2 years ago.
Yep. So there's obviously, we talked about, VA loans, FHA loans, conventional loans, jumbo loans. When we talk about assumable loans, are there certain loans that are assumable and certain loans that are not? How does that work?
Yeah, so technically you can assume all 4 popular loans. So VA, FHA, USDA, and conventional. The tough part is for conventional specifically, not all lenders are willing to allow those loans to be assumed. So when someone gets a conventional loan, inside of the documents, the closing documents, and just kind of how most lenders do, there will be terms that don't allow for an assumable loan to take place. So, and that's the tough part. Very few people know whether their loan is allowed to be assumed. I haven't seen any loans that I've done in my time of doing lending with that ability. It is possible, but again, it's another one of those unlikely. With VA and FHA and USDA, those loans can be assumed. They're government-backed loans.
Right.
And yeah,
And the reason for that is the bank doesn't make the money. It's all about the money, right? The bank wants the higher interest rate, the current interest rate, to make money on the money they're lending out.
Well, the
right?
difference is, FHA and VA are government backed, right?
Yeah.
The mortgage-backed securities versus conventional loans, for the most part, those are driven by investors.
Yeah.
And if the investors don't think they're going to get as much of a return, they're less likely to invest in it. So if I'm understanding this correctly, by default, an FHA, a VA, or a USDA loan are assumable from the jump.
Correct.
Versus a conventional loan by default is unassumable unless at the point it was originated, it was deemed and written into the documents that it can be assumed at some point down the line.
And this is a good thought. If you do an FHA, assume an FHA, the current FHA mortgage insurance is lower, but you're assuming the old one, right?
Correct.
Every term that's on that loan gets transferred.
Right.
Yeah, it doesn't update to the new, whatever, 83 basis points or whatever.
Yeah.
it was
If
that-
you want that 3%, you're going to get
Which is
all of it.
all day long. I'd
So
rather
then-
take that 3%.
So then, Colin, let me ask, because you said, it's basically up to the lender on the loans that aren't government backed. Is that something that, let's say somebody's purchasing a home and they are going and getting a loan, is that something a buyer can then talk with their lender about and say, hey, I would like to discuss if I can make this assumable? Because now if a buyer thinks for the future, that could make them a little bit more marketable on the market, right?
So great question. The answer is no. And the reason because the assumable loan is also assumed by the bank that it's owned by. So if Wells Fargo has the rights or owns that loan, and you're working, let's say, with me, I can't help you assuming that loan. Mm-hmm. It's all going to be through Wells Fargo's underwriting department, their servicing
You still
department.
structure the loan, right?
No, I don't
You
do
don't?
anything.
Really?
I'm completely hands off at that point.
Well, so could they
So
get
for Colin's sake, don't do assumable loans. Call Colin and do a good loan right now.
The buyer can't ask for a loan to be assumed at the time of originating. Like if I go to buy a house tomorrow, and it's on a conventional, I can't ask you, hey, can you make my loan assumable?
Yeah, correct. Yeah,
Right.
Once it's written however it's written, and that's.
But the buyer has no influence on whether or not it's going to come out.
No, right. You can ask, and you can have that conversation with the seller and
Right.
see if that was an option that was put on another loan.
Right,
Go do some
right.
research on that. But no, it's not anything that a buyer can control.
Nice. Okay, so it's
And where's the document that states whether it's assumable or not?
It's in your note.
Correct. And either your lender or your realtor will know.
It's in the
And
closing
just pull,
document.
just
Yeah,
pull
it'll be in
out.
the closing
It
documents,
literally
yep.
says at the top of the document, note.
Yep.
And that note's going to tell you your interest rate, your terms, everything that you're paying on, whether it has a prepayment penalty or not, what are your late fees. Everything's on the note, not the deed, the note.
nice. Nice. I mean, I think that's great information because for me, that's the first place I went. I was like, oh, I might have an opportunity to ask about this, right? But so basically, what you're saying is overall, the writer of the loan is who decides if it's assumable or not.
Right.
Unconventional. FHA and VA, USDA, they're assumable from the get-go.
Yep.
Yeah. And it's tough because, I mean, my wife and I have been out looking. We see people will list it and say, hey, assumable loan at 3.75%. And my first thought to myself is, well, what's the loan at? Like, how much am I going to have to bring to the table to even entertain this? And it's through talking with the agent and having conversations and just discovering.
Again, it's creative financing.
Yeah,
It's creative,
not for
yeah.
everybody, but at the same time, if you fit, in my head, I look at it and say, let's say I've got a client that has the ability to put a very large down payment down.
Oh, yeah.
Right? Mm-hmm. And then the option is I can put 40% down on a $600,000 house, and that may affect my monthly payment, right?
Right.
Versus, let's say if I have that same amount down and it's another $600,000 house, but it's an assumable loan at 2.875. Yeah, you're going to come out of pocket more, and your monthly payment might be a little bit higher, but the overall interest that you pay on that loan over the course of the time you own that house is going to be significant, like hundreds of thousands of dollars different. Mm-hmm. So it depends, right? If you're going to buy a house and you're going to live in it for 3 to 5 years, probably not the smartest thing to do, right?
Mm-hmm. Yeah.
But if it's going to be a forever home or something, you're going to be there 10, 15, 20 years down the line, it's something to pay attention to.
Or if you just want the equity transferred.
Yeah.
You're like, I just want all my equity from my current home, just going to the next one, 100%, because, again, they're going to finance whatever the remaining, whether they do assumable or not. If it's assumable at 2.875, oh my God, the savings is astronomical.
Exactly. And if you're a buyer out there and you're looking at houses, right, and you're doing an FHA or a VA loan, and you see a house, right, ask.
Yep.
Just ask.
Have your realtor.
Have your realtor ask. Hey, can you find out? I'm good with an FHA. Or I'm going to use my VA benefits. Can you ask if the current loan is an FHA or VA? We can tell you.
Yep.
And if so, if it's FHA VA, it's assumed. So now we just ask, hey, so what's
When they buy it.
When did you buy it? How much is owned out of the loan, and what's the interest rate? Mm-hmm. And then if that makes sense for you and your plan, ask those questions. There's a lot of agents that will not go that extra step, or if the communication's not there and they don't know what your current financial situation is,
Or
they may
even
not
know
to
about
ask. Exactly.
Right.
So
Know to ask.
just something to ask while you guys are out looking. I think it's hugely
That-
important. It could be a big advantage depending on the
That's part of
situation.
my buyer's consultation. It's how much you're putting down and why. If it's a large amount, hey, you know what? Assumable loans. Let's see. And I start asking. A lot of the listing agents don't they don't know. I don't know. They didn't go over that. So okay, next question is
go make a phone call.
Is it an
Find out.
FHA loan?
Yeah.
Okay, cool. When they buy it, and then I'll know more or less what the interest rate is going to be on that.
So, Colin, before we move on to our next question, let me go ahead and ask you, what would you say is a pro and a con of assumable loans?
A pro is you can get down into that interest rates that
The
we
magic
had.
interest that we'll never see ever again.
Yeah.
Ever.
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 Probably be a
Ever,
long
ever?
time before I see it. Now, listen, I still am with this chemist that created this whiskey. We're trying to create a crystal ball. We
So
haven't
far,
perfected
it
it.
is not done well.
Yeah,
No.
yeah. It's
Again, we
been
talked
tough.
about it. The top economist is like, I
No,
know
everybody,
screw
yeah,
it.
it's yeah.
We don't.
It is
know.
a bit difficult to predict the future.
I literally changed my listing presentation on a few things, and one was days on market.
Yeah.
I on average, my days on market were 3 to 7 tops. Now, I think I wrote current market tends to fluctuate.
Yeah.
And we don't know.
Yeah.
Yeah.
Well,
No, it's
especially-
true.
I could be on the market for a week. I could be on the market. I think on
Well,
average
it's
is 35 days
yeah,
right now.
and this is a whole other conversation, but just to touch on it real quick, and I think the importance of why we chose this topic today is because this is a perfect example, right? We've talked before about how interest rates and inflation kind of follow suit. And there's a couple of, gentlemen I've listened to that talk about the mind games that the Fed is playing on how to manipulate where rates are, federal fund rate, and by correlation, mortgage rates. Perfect example is we got actually really good inflation news on this last CPI report that came out, right, 2 weeks ago. By and large, interest rates on mortgages have gone down in response to good inflation data.
Correct.
Which they did for like a week, and then out of nowhere, we went from low sixes right back up to high sixes. So the reason that, and I like how Oscar brought this up, that they tend to fluctuate, it's because before we could go off of cycles and say, okay, it's spring buying season. We got this much inventory, blah, 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 blah. Inflation's under control, so that's pretty stable. So we kind of have an idea of what's happening. Right now, we don't. We went from, and I don't know if you may not know the exact ones, but I know for a fact we were in the 6.2, 6.3s 10, 15 days ago.
Yeah.
And now we're 6.75, 10 to 15 days later. So what ends up happening is you start to see at 6.7, 6.5, your mortgage applications are here. Then all of a sudden it drops to 6.3 for like 2 days, and you get a 30% increase, right? Well, now a bunch of buyers flood the market looking for homes. We already have low inventory. So the point of this conversation is to arm you guys with just some different creative ways to think about buying a house, because you're going to have to, for the foreseeable future, make faster decisions.
And you might come up on a scenario where you have to cross a path and there's no way to do that. And what's one way that you can cross a path with no passage, Oscar?
Depends. Are we playing Oregon Trail?
Bridges.
You can ford the river.
Loans, which bridge loans are a bit different. It's more for the real estate side to make sure that you're able to secure the home without having to sell your home. But before we forget on the interest side, talk to your lender about also, because you said we're at the low sixes, everybody goes and they apply for a loan. But what they don't know is that you're not going to get that rate right off the bat, because if you haven't found a home yet or secured a home, you're not going to get that rate because you need to lock your rate. So talk to your lender about locking your rate. What does that look like? Can you do a TBD? Can you not? Talk to your lender about locking your rate, because if it's a 6.25 now, by the time you find a house, it might be 7 again.
All right, I'm going to give Colin a quick free plug, because we just did this with a client less than a week ago. To Oscar's point, talk to me about what a rate float down is real quick. Tell the people.
Yeah, I'll tell the people. So a rate float down is
Power to the people.
When you are locked in a rate and you have the ability to move that rate down or higher if you really want to. Don't suggest doing.
Float down, not up. Okay.
Yeah, try to float down.
Try to float down.
To be able to
it's the
float
opposite.
down and get whatever the current market's at. So Jameson's right. We did have a recent scenario to where my company at New American Funding, we offered that float down, and we had locked our client at a I can't tell you the actual numbers. We locked our client at a high 6, and then right before we closed, about a week before, we were able to get them into the low 6. We saved 0.5%
I think it was
on the rate.
6.75 to
0.5%
6.25.
huge.
Yeah.
Yeah, I think
half
she was
percent.
locked at a 6.75, brought it down to 6.25, and what did that do to her monthly payment and closing costs?
It saved her about $100 a month, and it saved her about because not only did the rate go down, we also saved money on what that rate cost. So she saved about $2,000 in closing costs and $100 a month on her monthly payment.
And what did she have to do to initiate that?
Nothing.
She didn't have to pay money.
No.
Because
She
usually,
didn't even
anytime you
know about
extend stuff or anything like that with,
Nope.
with banks, it's at a cost.
Yeah. Yeah.
So that's cool. If she
Yeah.
didn't have to pay anything, that is
Yeah.
awesome.
The reason I bring it up, what we're talking about today, is having the right team and having people that are supporting you guys. But this client did not know that. Like, she's not paying attention to rates every day. That's our job, right? We floated her down for free, saved her $100 a month, saved her $2,200 in closing costs that went back into her pocket. She had no idea until we told her, and she go, "Oh my God, that's amazing."
Yeah.
Right. So to Oscar's point, ask your lender, right? Do you have a rate float down? And the reason that's important right now is because we are seeing rates go up, down, and sideways within days.
Yeah,
So
it's fast.
Oscar, you want to grill Colin on bridge loans? Because that'll be fun.
Now, full disclosure, there is a cost to getting that float down. However, I personally cover that cost. So I will
But again,
I will
goes to
throw
show-
that out there.
Well,
Value
it goes to show.
add.
Well, I was going to say, it goes to show, again, having the right people.
Yeah.
We talk about it all
Yeah.
the time.
So bridge loans it assists the real estate side. Obviously, I take a listing, and my sellers are going to find a replacement home. Well, now we have to play the fine dance of trying to get them under contract on their listing, find their replacement home. We've done that for the last few years, and it's not hard. But if they find the home, and if I submit an offer and I still have to sell their home, the seller on the replacement home is very reluctant to accept it because now we don't know when this is going to sell. The last few years, they would sell super quick. It didn't really matter. The other agent would pull up the property and say, "Oh, it's on the market already. Yeah, we'll accept it. It's a great property. It's priced right." Now, I think we're going to see more bridge loans or those kind of vessels to do loans because we don't know how long it's going to last on the market. So a bridge loan states, I'm going to use the equity of my current home to bridge the amount to purchase that home.
Bridge the gap.
Bridge the gap so I don't have to sell this one and then sell this one and then pay it off, right?
Correct.
So you take the equity out. It's like if you sold it. You take the equity amount and then you go buy this house. It bridges that amount. So you're not coming out of pocket with a loan to purchase that home and then still have a mortgage. You're getting a loan for the equity amount of your current home and the original loan. Well, it's all bundled in, right?
Right.
So it bundles in and bridges that gap. So then you could just turn around and sell this house.
Right. Yeah, so how a bridge loan works, and full disclosure again, I don't do bridge loans. However, I do have a cash buying option called N.A.F cash, which I will plug later.
Which is better.
Yeah.
It's better than a bridge loan.
Listen, might be a little biased.
We'll talk
but-
about that in a second. But yeah,
yeah.
so go through the process of a bridge loan. What people need to know.
So doing a bridge loan is taking the equity inside of your existing house and saying, "Hey, listen, I have at least this to be able to put down onto the next house when my house sells." So then a loan officer will go and they say, "Cool, we can bridge the gap between the two, so you don't have to sell your house immediately." The only catch is you have to qualify off of holding your existing mortgage, the bridge loan mortgage, and the new mortgage of the house. So the only catch-22 there is you have to be able to financially be able to hold all three at the same time because your house isn't sold yet and you need time to sell your house. Now, if you can do it, it is an amazing option to be able to go buy your new house and be able to make offers that are non-contingent because you now have financing that allow you to do so.
So, Colin, would you say that bridge loans are definitely for somebody who does have a significant amount of money in savings already when going to start looking to kind of moving that around so that, or at least
It's
enough income to cover?
Income, yeah.
Yep.
Income's going to be the most important part.
High earners. Anybody that has a high earning job that it's expendable, they're not stretched out on.
I guess I'll say income with low debt.
I was gonna say, it's more DTI than anything else, right?
Correct, yeah.
'Cause you
Debt
gotta-
to income. So it's the combination of the two. If you have a ton of debt, you have 4 Lamborghinis that you are financing.
You need to be my friend because I'm going to drive one.
Yeah, it's
Oscar's always talking about Ferraris.
Oh, I love
depending on your
exotic cars.
income that allow you to support that. It might be tough, but it is definitely an option and a creative financing option.
Now, I'm going to ask a question. So on a bridge loan, right, I would assume that the interest rate's higher
Correct.
because it's an unrealized gain. Because to Oscar's point, you're taking the equity, right? But your equity is based on what you owe and what you're going to sell the house for. There's a chance that your house sells for less
Yeah.
and you make less,
Right.
right? So,
And or it takes a while to sell, so
Correct.
it's a risk.
so they
It's
want
a
a
risk.
higher return. Is that
They
correct?
want a higher return because also they know that loan will be paid off when
Right.
the first house sells. So
Right.
it's a short-term investment
Okay.
for lenders and banks to be able to lend on that, saying, hey, listen,
Sure.
we know this is going to get paid off here pretty quick, hopefully, depending on when you
But
sell
again,
your house.
could be
a
180
while.
days on market.
Yeah, could be a while.
So it's
And
days on market fluctuate.
Yes.
yes.
So
Especially
what's
in this
Don't be scared.
what's a pro for a bridge loan and what's a con?
A pro is the ability to be able to buy a house non-contingent
Okay.
if you can hold all three.
Okay.
Yeah, and qualify for all three.
And what is the con kind of the opposite?
Higher
You gotta-
rate.
The con is you have to qualify for all three.
So
And
out
higher
of
rate.
curiosity, and I have no idea, is there a different option
There-
that people could potentially use that
There is.
maybe you and your company offer?
Yeah.
And if so, can you kind of go through what that looks like?
Yeah, so it's called N.A.F cash.
N.A.F. Cash.
Yeah, we New American Funding.
Cash.
Acronym. Thank you.
It's like the Best Buy days.
Yeah, exactly. Acronyms on acronyms
On acronym.
on acronyms. Yeah, there's a lot, especially when you get into this market and job. But N.A.F cash allows you to be able to go and buy your new home with cash, be able to go non-contingent, and make your offer a lot sweeter. The other reason is because not only are you buying it with cash, but you also have a backing of a lender that's certified everything to say that not only is this cash, but it's also been fully underwritten and approved. The big thing with cash is N.A.F cash is we work with your agent on the sale of your home to provide a net sheet to show kind of like, hey, what's best case scenario, worst case scenario? So that way we can try to avoid any bad scenarios or unseen scenarios. And then you don't have to qualify based off of your old mortgage. You only have to qualify based off of your new mortgage and then assets to be able to, let's say your old house did not sell as fast as you thought it
I was going to
was.
say, what's the buffer on that?
There's a rent back, and we need to show a certain amount of assets to be able to hold, or not be able to hold that, but be able to afford that. So it doesn't hit your qualification as far as like being able to hold all three mortgages, because there's really only going to be the one. It's going to be the future one, but it allows us to move a lot quicker, and again, buy a house with cash.
2 questions. One, what is that? When does that rent back start? And 2, well, I'll let you answer that one. When does the rent start back?
Rent back starts the day you move into the home. So the day the house closes and you move into the home, the rent back is initiated.
Okay.
So there's a buffer. You could sell your house before then and not have to deal with it. You could sell and it's based off of a monthly. So, and the number varies based off the purchase price. But let's say you get hit with the full month and you close your house in half that time. Well, then we'll prorate that amount and give that back to you.
Is it a standard 30-day close that you guys assume?
Yeah. Standard. We can move quick.
Well, I was going to say, with the cash,
Yeah.
can you close that cash?
Right.
Can you do it out in 2 weeks?
Yeah, we can close it extremely fast. Now,
'cause-
if we close extremely fast, just know your house is still sitting on the market, depending on how fast it is. But if we need to move that as a selling point, yeah, we can move very quick.
And just to go ahead and clarify what Colin's talking about, when you hear about contingent, what he's talking about is when we're talking about a bridge loan, basically a lot of the sale is dependent on the fact that you're going to sell your house. Mm-hmm. What Colin's offering with N.A.F cash is saying, hey, we're going to get rid of that thought for you, so the seller doesn't get scared of that time frame that is coming between you buying and you selling your house and then waiting for that money.
Right.
So N.A.F cash is basically you guys coming in and saying, hey, we're going to help you out to give you that peace of mind.
Right.
It doesn't even help out. It goes beyond that. The lender buys the house.
Yeah.
Cash.
Yeah.
Right.
We
So I
put the
pick a
cash
house.
out.
So walk me through that process. So let's say I'm a buyer. I've never done this before.
Mm-hmm.
Okay, I rephrase. I've done it once since I have a house to sell.
Yeah.
Okay. So let's say it's a townhome. I got to sell it. I want to buy into my next house. I don't want to be contingent. So just in simplest terms, what does that process look like? Because a lot of people are going to watch this and go, what do you mean the lender's buying the house and they rent it back? Like, what does that look like? What does it mean? Like, do you guys buy it cash? Do I have to give you the money? What is the process?
We work with a bank that funds the loan, the cash towards the seller, that will literally go buy that house with cash. Now, you have to go through a full qualification process, and we send it through underwriting before you are qualified to do it. So we make this about as bulletproof as possible to be able to move forward and be able to buy your house cash. But you apply, you say, hey, listen, this is an option. I want to go non-contingent because maybe the market's heating up a little bit, which it is. Mm-hmm. And you say, okay, cool. The other thing is you're not subject to any other rates, any other bank rates. You're subject to exactly what we offer your standard person. And then once it's fully underwritten, we have the net sheet from your real estate agent on the sale of your home, and we know exactly what that is. We submit all that. We get an approval, and then we can go, okay, cool. We can now start making offers of the cash and close very quick.
And I know there's a real estate side, like how like writing an offer, because technically you have to write 2 offers, right?
Correct.
Which I'm not going to go into that. But at the end of the day, from a buyer standpoint, my agent's going to offer cash at whatever that price point is. Okay.
Yeah.
So my question now is this: you said the market's heating up. So what if I want to offer over list?
Yeah. So it's going to be part of your qualification. It's going to be saying
have to afford whatever that number is.
Correct. Yeah. And it's all a number. It's all a moving scales. If you want to do an appraisal gap, we can do an appraisal gap.
As long as you have the assets for it.
Right. Yeah.
So let's say we get accepted.
Mm-hmm.
Okay. Let's say we do an appraisal gap. Worst case scenario, we have the assets for it, because I'm assuming as a buyer, I have to then cover that gap just like normal.
Right.
Right. And then now I move
appraises?
into the house. I close in.
You're still good, right?
Yep. I close in 21 days, let's say. Now I sell my townhome. Now I use those net proceeds based off of that net sheet to pay towards the cash offer that was used on the new house, right?
Say that again.
So if I'm a buyer,
Yep.
I'm buying a house with N.A.F cash.
Mm-hmm.
We offer cash. It's a $500,000 house. We have to offer $520,000. I cover the $20,000 in appraisal gap. You guys buy the house for $500,000. It closes in 21 days, whatever that looks like. In the meantime, I sell my townhome.
Yeah.
Okay. Those proceeds from the townhome now go to pay off that loan that you guys just used to buy that house cash.
Yeah.
Correct?
Right.
So before any of that happens, you have the total loan amount that I as a buyer have to qualify for.
Correct.
All right. So, and to piggyback on that $20,000, do you guys front that, or does the buyer, or when they qualify?
No, we'll front that. Now it's part of your qualification. Perfect. But if you say, hey, we're buying a house for $520,000 and it prices for $500,000, then that's part of this is how the contract was written. We're given $520,000.
No.
Perfect. That's awesome. That's good.
Yep. Yeah.
That's a great clarification on that.
What's interesting about it too is since the pandemic, we have a lot more people who have jumped into this gig economy, right? Where they're making money by themselves without a standard W-2, and they have to figure out, hey, I can't provide a lender with the standard information like I could.
What's an example of a gig economy?
Hey, look at me. I work on Upwork and I do video editing as freelance on the side. So what that means is I get paid from companies, from individuals to edit videos and put them together, but I don't get a W-2 from that. All I get to show is my earnings. So
what if I'm a realtor in my first year?
Same exact. Wait, am I double dipping?
Whoa. You are, because you get paid by multiple title companies, but it's on paper.
Yep. And what ends up happening with that is, on the basis of creative financing, people walk in and they go to get a loan and they find out, wait, you're not a normal kind of earner, a
you're
typical
not a
kind of
normie.
earner. Yeah. So wait,
you're a hustler.
How do I qualify? What can I do? Well, you're
Sir,
not.
why are you coming in with all these ones?
What do you have 8 stickers on your car? I see Uber, Lyft, Instacart, DoorDash. You look like a freaking
PTs.
Subaru WRX from Utah.
Right? But with that being said, the market and real estate in general, banks aren't going to stop you because you don't just have what's normal, right? And this is why we're talking about creative financing. So what we want to touch on is what's called a bank statement loan. And virtually, bank statement loans are a great option for people who are freelancing, who are real estate, who own their own businesses and have to figure out what they are. So Colin, what's a bank statement loan?
And not only that, but someone that went from a W-2 job to 1099.
Yeah.
Now the guidelines say you have to have at least 1 year to 2 years on that same income stream, well, that's not going to stop you. If you have great credit and you've done everything right, bank statement loans.
Yeah. So bank statement loans are to help the underserved and the people that just straight up need it. So what a bank statement loan is, we will take your credit and we will take your bank statements and your assets, and we will be able to create a loan for you to be able to say, hey, listen, this is maybe a more risky loan. You're subject to whatever the terms are. However, rather than the option being no,
Waiting.
or no, or waiting for a year or two to wherever your income starts to be able to become qualifiable, we can come and create a program for you that will still get the job done through our bank statement loan. So it's
a short term, right? It's a short term game, because then within that time frame, instead of waiting 2 years to buy, you buy now, and then you're subject to those terms, and then 2 years later, when your situation's better, you refinance.
Yeah, and it can be, right? And there's some people that maybe will never be able to get their income qualified. And that's okay, because we can get them into a loan that will be able to. It could be a short term. It could be saying, hey, listen, I'm a year away, and we can get you into something now, and then hopefully the rates, and we predict the rates will get better, and you can get into a conventional or government loan or whatever you need to do. But we provide an option to be able to get you that house that you maybe always dreamed of.
On that note, Colin, something that would be important for everybody to note, right, is a bank statement loan, like we were talking about, isn't going to be backed by the government, right?
No.
So with that being said, as we talked about a little bit earlier, if something's not backed by the government, technically there's more liability on the bank. So how do interest rates look normally with a bank statement loan?
Yeah, with the acronyms, with the DTI, LTV, all those good things.
Yeah, debt to income would
BOB.
not exist because we don't have your income. But your loan to value, we take anywhere from 20% plus. There's LLPAs, loan level pricing adjustments, that are based off of different situations that you might be in, based off credit or assets or whatever it is. But it's a lot of just situational stuff of, hey, listen, what do you have going on? Awesome. Let's talk about it. Let's try this. New American Funding, we write loans in 48 states across the country. But we
Very
work
rude to those other 2 states.
I know,
Yeah,
that's jacked
it is.
up.
And is
We're
NAF cash available and all?
an exclusive
NAF
podcast
Cash
here.
is available in 48 states.
Yeah, I think it's 48
Awesome.
states. Yeah.
Awesome.
Those two shall not
What are
be
the
named.
2, by the way, that aren't?
They shall not be named. We
Good
don't.
enough.
We
We'll
don't.
figure it out.
You guys can't
We don't
disclose
talk.
that?
We don't talk about them.
Okay, fair enough.
They know who they are.
You know what you've done.
Yeah. But we work with a bank called Champions Bank. We work directly with them to be able to do something like this. To again help the underserved.
Are their underwriters, or your underwriters do it?
Their underwriters do it.
So do you, 2 questions. Number 1, what do interest rates kind of look like?
Interest rates are higher. I mean, you're talking 7s, 8s,
And
depending
then
on what it is.
secondly, are there down payment requirements?
There are down payment requirements. You're looking at 20% plus.
Okay.
The more you put down, the better it gets. Of course,
And that's
with
those
anything.
loan level price adjustments that you were talking about earlier.
Correct.
Okay.
Yeah. Loan
So
level price
down
adjustments.
payment and credit, right, are the 2 factors that are going to get you the better rate.
Right.
Well, and you know what? So I look at these, right? And I think bank statement loans are not talked about enough because of what Charlie said, the gig economy and people that are running DoorDash and Instacart, and I call them, it's the hustler economy, right?
Yeah.
That's what you guys
Get
are
stuff
doing.
done.
If you're doing that to make a living, you are a hustler. That's the hustler economy. You know what I'm saying? Fucking high five. Let's get it.
Woo, let's get it.
And we're hustlers. Like, we're real estate agents. We're lenders. That's what we do. Okay.
Rick
But when I
Ross.
look at it, so I used to bartend. Charlie, you came from a bartending background as well. I was making back then $3.25 an hour. Okay.
Yep.
But I would sit there and I'd cut every single server. And I know any bartender watching this is like, fuck yeah, I cut all the servers. And then I would walk out
All
with
the
$500-$600 in cash, right?
At night.
Now, I don't want to pay taxes on that cash, but they're cash tips. I only had to claim a very small amount. So if I were to go and buy a home, I could make $150,000 a year as a bartender, but my taxes, my W-9s, whatever it is only going to show $35,000 a year plus maybe some tips because I don't have to claim them. Well, if I walk in and I call Colin and I say, hey, I just want to apply for an FHA, first-time home buyer, whatever it is, Colin's going to look at me and go, yeah, cool, get the fuck out of here. However,
an hour.
this is why the bank statement loan to me is cool because it represents a couple of things. Number one, opportunity.
Now, do you have to stick that money in the bank?
No, totally get it.
It has to be in the bank.
Totally get
Yeah.
it. But I can stick cash in the bank.
Right.
I don't have to claim it on taxes unless they want to audit me, which IRS is short-staffed anyway, so that's not going to happen.
Wait,
I know because I
They
did it
have
for
80,000.
Dude, I did it for 8 years. I made $90,000
No,
a
I'm just
year
saying,
bartending. I got money back every
They're
year.
so behind, and they added it, and that's a whole. Nother
That's what I'm
story.
saying. But my point is,
And
yes.
the ninjas.
So I put all my cash from bartending. And I had years I was making $90,000 to $100,000 a year at bartending. I only claimed $36,000. I would get money back. It was fucking crazy.
America loves their alcohol. That's
But
Oh,
here's
absolutely.
why I like this, because the whole purpose and why we do what we do is we want to help you guys achieve whatever it is that you guys want to achieve, okay? So when I look at like a bartender, I look at the Instacart drivers, I look at the freelance media producers, I look at all these different people and I go, hey, why can't you get into a home?
Yep.
Right? The beauty of what Colin provides and New American Funding or other lenders that if you guys are working with somebody, ask them about. From a bank statement loan standpoint, yeah, the down payment's higher, but it is a higher risk. You guys have to understand that.
Yep.
But the purpose is there is a possibility.
There's an ability to do it.
And
Exactly.
Yeah.
here's the other thing, right? And we've done this multiple times. If you come to me and say, hey, this is what I make, this is what I do, it's not changing anytime soon, but I can't qualify. Let's look at a bank statement loan. Okay, well, I need 20% down. Totally get it. I don't have that right now. That's fine. Let's take a 16-month time frame. Let's put a plan in place, put a certain amount of money aside in a separate checking account that you open up at your bank specifically for a 20% down payment. And then in 13 months, we see where we're at. We check in with you every 3 to 4 months to make sure you guys are in the right spot. As soon as you have, or we're in ear or eyesight of that 20% down, we start shopping. We start doing the pre-approval with a bank statement loan. And now we have the ability to help you guys get into a place.
So what
When
you're
do you think it's
saying
possible?
is we might have to get a little
Wait.
creative.
On top of that, what is the guideline on the money in the bank?
It has to be sourceable incomes.
The seasoned. So what I'm
Yeah.
talking about is that you
Good
can't just
question,
go
actually.
drop $50K in the bank and call it good. The bank's gonna be like, where the hell does this money come
Well,
from?
yes,
Yeah.
because
So it has to
okay,
be seasoned funds.
to
What
Oscar's
is-
point and to his entire persona, we're not trying to help the drug cartel buy houses, okay?
Oh, hold on, time out. Yes, we are. Bank statement loans can't happen if you are a cartel.
What's your
tell
income?
you.
I don't know. How do you quantify 20 kilos a
No,
week?
so-
I'm not sure.
So with that said,
sweating over here now.
with that said, seasoned funds. What's the time frame on seasoned funds?
Season funds are 2 months.
As long as that money's in there for more than 2 months, you're solid.
Yeah,
Call me
season
up,
funds.
Chapo.
Listen, we
you
look
guys know any good
through.
laundromats?
I'm just
I
giving
know 5.
standard guidelines here. We look through 2 months worth of bank statements.
Hey, Charlie, can you overlay like the really fast talking disclaimer guy that you hear in like radio commercials?
Yeah, 100%.
Hey,
100%. 100%.
but yes, the whole point is like
The views of this podcast do not.
Do not reflect
We're gonna
the
do that.
personal, the personal viewpoints of these.
Yeah, we'll overlay that. The point is, if you guys are, part of that hustler group that is out there working your fucking asses off,
We can
but
sell
maybe
to you.
for cash tips or maybe doing multiple jobs that isn't consistent to get where you guys want to go, we have options. Colin has options to help you guys get to that dream.
All right,
And
Colin,
you know
so-
what? The bartenders are one of the ones that are.
Dude.
my
keep
ex
us afloat,
brother-in-law.
man.
I did his loan and his real estate, and I was surprised. He was like, "Dude, I bring in a ton of cash."
made
And
a
then
stupid amount of money
at the
part-time.
time, at that time, the bank statement loans weren't around because
Right.
of what happened with the
2008,
recession.
Yes.
yeah.
Yeah,
Because
there's a
back
lot
then
of
it was
banks.
stated assets, stated income,
Right.
and then that kind of ruined it for everything. So they were gun shy to bring those back.
I say back then banks were getting it handed to them, so they
Yeah,
were not
so-
willing to
But
go loan a bunch of
bartenders
money.
make tons of money. My buddy Joe Q, tons of cash, but a lot of times they can't.
Exactly.
Think
Or
about
they don't wanna
entertainment.
Their
claim
taxes
insurance.
don't.
Yep.
Well, just think about entertainment economies like Las Vegas. You have bartenders out there
Entertainment.
that are making over $100,000 a
Las
year.
Vegas.
Entertainment.
If you're
Right.
depositing tons of dollars into your bank account, we got you.
We got you. That's
We're
it.
not going
So,
to name
Colin,
that.
Literally,
go ahead,
like
give me
dollar bills,
Give me a
like
pro and a
$1
con
bills.
of a bank statement loan.
A pro of a bank statement loan is the answer's not always no. It's how. And through bank statements, again, like we covered, you could be in a certain situation where you just can't prove your income. You make a bunch of money. You could tell me all day. I know it. And in the lender world, it's not what I know. It's what I can prove.
It's also true for lawsuits.
Yeah. Well, fact. In the world of facts,
Criminal prosecution.
it's not what I know. It's what I can prove. And
Overlay the...
a con is, you're going to need some assets for it. You're going to need some money in the bank.
But
and
to
whatever
get money
that
in
looks
the bank,
like.
seasoning is 2 months.
Seasoning is 2
Right?
months.
So if you're that bartender and you're making a shit ton of money and
Yeah.
all that money's in your mattress, before depositing all of it at the same time, talk to a lender, say, hey, this is what I have. Here's my plan. What's the best way to pursue this? And we will give you the answer.
Yeah.
On
Again-
top of that, talk to your realtor and your banker because
I was gonna say,
I came from the banking world. I worked for Bank One. It's Chase now. But if you do over $5,000, you're going to do an LTE,
Yes.
and if you do over 10
10
grand,
grand,
it's
they
CTE.
gotta-
So
yeah.
they'll audit your
Correct.
butt. They'll
Yes.
audit your ass quick.
But again, the whole purpose of this, guys,
Watch what you're doing.
is we're giving you the questions to ask. Please let us know how we can help. Because to Oscar's point, you can't just deposit 40 grand and then it doesn't, because then what happens is it gets
Red flags.
flagged. And it could be completely legitimate, right? And hopefully it's completely legitimate.
I don't care.
I kind of care a little bit. But it could be completely legitimate. But if then the underwriters go and take a look at it and they see a deposit that's flagged, it's gonna make it difficult, right? But if you got 50 grand, maybe you deposit $2,000 a week for the next X amount of
And
time.
that's the
and
plan.
we put
Yeah.
a plan together, whatever that looks
To your
like.
point earlier, that's the plan you
That's
put
the
them
plan.
on.
Correct.
And on that note, we are not certified financial advisors, but we are giving you this information
do you know?
for you to do what
My
you
side
would like
hustle is
with it.
Western
Hey,
Mutual.
you know what we are though? We are certified no bullshitters.
no,
And
that
will
we are
give you-
certified on.
We will give you the truth. You can go ahead and verify. We'll give you the truth from our experience.
Even if
and then
it
you
doesn't
guys can take that
sit well
information.
with you,
So-
we're going to tell you the truth.
Yep.
Because that's what we are.
I
I
want
love
to
it, though.
say that I am a legally certified.
Yes, Colin is a legally
licensed
certified, licensed financial
lender.
advisor.
I
Yes.
talk about money. I know things.
He drinks and he lends things. That's it.
Yeah.
That's it.
That's it.
That's it. I
Love
like
it.
it.
Yeah.
Well, and on that note too, on the note of creative financing, there's one big thing that you hear, especially if you're on social media right now. There's a lot of people talking about how real estate agents don't know about this option, or your real estate agent is stupid if he doesn't know about this option. And it's something that I've used recently. Jameson, I believe you've used it recently. Oscar, you said you've used it as well, and it's what's called seller financing. And it's kind of on the note, and I think it does tie a little
Call
bit.
it Custard's last stand because it's like the last option.
Yes, the last option.
And it involves a third party that may or may not want to do
Yes.
it.
Exactly.
Right.
So Colin, can you kind of give us just a quick rundown of what seller financing is?
Seller
Colin
financing.
says, "Fuck you! I don't do seller financing. I do my own
It does. It
financing."
does not involve a lender.
Yeah.
It involves a seller.
Seller financing has nothing to do with me. So next question. I'm just kidding.
No, but seriously,
I'm just here so I won't get fined.
we cover it because it doesn't involve any lending.
Right.
Yeah.
It involves lending in the sense that you still have to develop
Yes.
a note. You got to talk to an attorney. You don't involve a lender, and it's the seller doing just that. The seller's going to say, "Hey, I'll cover you. You can't get a loan. I'm going to dictate the terms. I'm going to dictate the interest rate, and if they're not hurting for cash, or they're just some investor that they'll collect the money, they'll set up a loan for you."
So on that note, what seller financing is like Oscar said, and thank you again. I asked you, Colin, just because you can't do it, right?
Yeah.
So Colin can give
yeah.
you the big bird.
But what seller financing is it basically gives the buyer an option to go directly through the seller in order to purchase the home. So
The
let's
seller
say,
becomes the bank.
exactly. So
Right.
let's say the seller. So as an example, right? Let's say you have a home that when the seller bought it was $900,000, but over time it's gone up and now sitting at $1.8, $2 million, right? As a buyer, you can approach that seller and say, "Hey, you have a lot of equity in this home. I would like to see if I can work with you in order to capitalize on what you have and maybe own it in the future." Right? So basically what you do is, as a buyer, you go talk to the seller, like Oscar was saying, and you work with them as your lender. And they tell you the loan, basically, this is what we want to see from you for the amount. This is what we want to see for the down payment. This is what your interest rate's
Now
going to be.
again, it can be like everything in real estate. negotiable.
Yes, but
Everything.
again,
Correct.
that's where I was getting to, as well as this is again another note as to why having a good agent
Yes.
on your side is important, because it takes negotiation
Yes.
tactics. It takes knowing how to talk to people and work something out, and not being afraid to ask certain questions and get you to a certain
Yep.
rate or anything like that, right? And seller financing is unique in the way that you're basically paying the seller over time in order to own the home at the end of it, right? That's as simple as it's going to get. Now, as a buyer, you have a lot of power in this scenario, right? Yeah, it sounds like it sucks because the seller's coming up with a lot of financing, but at the end of the day, there is a lot of liability that's put on that seller with seller financing.
And when we say asking questions, I mean, there's the annoying questions that, I'm asking all the questions. I don't give a crap what the dang utilities are.
Yep.
Let's ask the important questions. I was going to save you thousands of dollars or get you in the home.
Yep.
Seller financing, bridge loans, the technical stuff that's going to mean something, not annoy the seller.
Exactly.
Yeah.
And I think the seller financing, I mean, the big thing is, right, if you take it between, like, somebody goes, well, what's the difference between seller financing and regular financing if they're just acting as the bank? Well, we call it kind of a last resort because it is, if somebody is in a situation, needs to purchase a home, but can't go through your standard loan origination, can't go through bank statement loan, can't necessarily go through a bridge loan, can't use N.A.F cash or any other cash buying
Or
program.
something quick. You want
Or
something
they
quick.
want something quick. They don't want to go through it. Or, I mean, a scenario where you've got something that literally is not qualifiable, right? Well, I have the money. I can prove I have the money. Let me figure this out and see if I can negotiate better terms.
A great example is your client, right? He did not need a loan.
Yep.
I mean, this guy makes buku bucks. Going to get a bonus of like 1.5 million or something like that. Doesn't want to go through the process of doing all these loans. I would do a short-term financing with you. I will pay you X amount of dollars a month. We'll get an attorney involved.
Yep.
Let's get it done out the way. A month or two later, I'm going to get this bonus and I'm going to pay it off.
Exactly.
It's a short-term quick thing.
The attorney involved, a legal document, everything that protects the
Both
seller.
parties, really.
You want to protect both parties.
There's going to be risk involved in. There's going to be risk involved in anything that's not government backed, right?
And not only that, but Colin, this is a perfect example as to why lenders are so necessary in the process in general, right? Because not only are they providing you with the ability to buy, but as you said before, there's processes, there's security, there's things that you have to clear in order to qualify for that loan. So that is why even, going through a lender, getting a loan, yes, it's scary to take out one of the biggest pieces of debt that you're ever going to have, but know that there are some things like seller financing where you could just be at the hands of the seller and you almost have nobody backing you other than the agent and the sellers.
But I mean, to re-quote that, I mean, scary, yes, but at the same time, no, it's a privilege.
Absolutely.
We're one of the few countries that will allow you to finance something this big.
Well, and here's the way
Leverage your money.
Yeah,
I've said it so many times throughout this podcast. Leverage your finances.
Financial
They're
literacy.
here for a reason.
Well, here's how I look at it, right? Like when you talk about seller financing, what we know is, again, we're in this weird market, okay?
Weird market.
Like at 625 right now, which is, again, it's just insane for me to say this, but at 625, we have so many buyers in the market and so few houses. You can list something, and if it is turnkey ready, doesn't need updating, it's gone, okay? It's gone. We saw it this last weekend. Your client, $450,000, 15 offers. It was listed at $375.
We offered at $413.
Yeah.
And
Anyway, that
within
agent,
4 hours, it went up to $450.
That agent, Chrissy Woodruff, if you're watching, thank you.
Shout out.
I know you personally. Phenomenal job on those listings. But anyway, she listed 3, got 3 under contract, all multiple offers. Okay.
Yep.
As soon as the rates hit 6 and higher, the threshold right now, from my standpoint, and Colin, you can probably pull up data from loan or mortgage applications. Like 6.4, 6.5 is the sweet spot. If we're under 6.4, you start to see buyers flood the market.
Yep.
If you're over 6.5, you start to see them pull back. The reason seller financing and everything that we're talking about is, yes, does some of these behoove a buyer? 100%. However, if interest rates continue to stay elevated, these are things that you as a seller can also use. So if you have a listing and you're like, man, I'm not getting anything done on this house, I have no action, blah, 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 you can use things like, hey, my loan's assumable. to bring buyer attention. You can use loan or things saying, I'm willing to provide seller financing to attract people to your house, right?
Why are you giving all our secrets away?
Because
that's what
Because
we're
that's
here
what this
for.
podcast is about.
and it's
That's
on the
you know what,
internet.
it's
It's the
it's-
greatest free exchange of information the world has
Absolutely,
ever seen.
That's right.
we're giving you the tools to
I'm
quite
giving away
possibly
the
help
secrets,
your
bro. I
agent.
don't care.
We rather you use us,
Yes.
but we are educating you, so you could probably educate your
Oscar,
realtor.
you know what? Hey, I'll be honest. So check this shit out. Okay, I looked at the stat earlier today.
Check it out.
He is
the
the
last-
stat man and the walking thesaurus.
The last 7 days,
Thesaurus.
we
really
had
is.
what I say. We had 1,100 new
1,100.
listings. We had 1,700 pending, and we had 1,500 closed. Okay, so 1,100 new listings in the last 7 days. 1,700 went pending. 1,500 went closed in 7 days. What does that mean? We have no fucking inventory. Okay,
And on top of that,
we
we're
don't.
projecting to
We
go
don't.
under that 6%.
Agreed.
It's going to be hot.
This is what I'm saying, though. By us telling you guys, even on a seller standpoint, some things that you can do if you need to get out of your house, if you do want to move and you're afraid of interest rates, whatever it is, look at seller financing. For example, if I am a seller and I go, oh man, I'm at a 3.5% and I don't want to move and upgrade to a 7%, okay, I got two options. I can do an assumable loan and advertise that, okay, and now what I'm getting is I'm getting my house sold quickly. I can probably get it potentially over asking X amount of money, whatever it is. But what about seller financing? Well, if I can float it and I can float 2 mortgages and I can get somebody to purchase my house at a 9%, okay, with 30% down, let's say, now I can go buy my house. Yes, I'm going to be at a higher interest rate, but I'm making 9% on the money that I'm loaning to somebody else.
Yep.
Yeah.
So it starts to offset that imbalance of
and-
moving from a 3.5% to a 6.5%.
For all our friends that are realtors, you're welcome. We love you,
Bro,
but
I'm
you're
sorry,
welcome.
man. I'm telling
You're
you,
welcome.
Like,
And
this
I
is
think,
why we do what we do.
I think this is a good. I think this is a good place. Colin, thank you so much for coming on, man,
Yeah.
and giving us your insights and giving us all the information
and the secrets.
Yep, and helping
I love the
everybody on the other
secrets.
side of the camera, right? But I think this is a good time to move into our one rock takeaway for today's episode.
Okay.
So I'm going to go ahead and have Oscar start it off this time,
Oh, wow.
Wow.
dropping it on you.
I'm going to go ahead and go with the solid 4.
What? No, one rock
One rock
takeaway.
takeaway.
Oh.
Summary.
I'm still going with the 4. I'm just kidding. The chemical stuff in this is great. One rock takeaway. Ask questions. We've armed you with a ton of information, not just your lender, your realtor. I mean, there's realtors. Real estate's not just black and white. Everything's negotiable. If there's a will, there's a way. Know the people that you're working with. Know that they're knowledgeable. I know it's redundant. Knowledge is power. Ask the questions. That's what this podcast is about. Ask the questions and have competent people on your side, whether it's real estate or the lending. They're the biggest ones. The rest, whatever. But arm yourself. Ask the questions. There's going to be a way. And if a realtor is just black and white, you might want to find a better one. And if your lender is just black and white, you might want to find another one. And with that said, I was a lender prior to being a real estate agent. There's mortgage brokers and mortgage bankers. The brokers have way more options. Don't be afraid of them. This man has a cash. You have the ability to go to cash with his bank. That is huge. The big banks can't do that. He can.
Yep.
Jameson?
Man, I'm going to piggyback off Oscar because I guess my biggest rock takeaway is if you have enough information or ammo, you can figure out your scenario no matter where the market's at. A perfect example is N.A.F cash. Used to be buyers accept.
Used to
Right?
be. Yeah.
We talked about it a ton in September, October. Then the market died November, December, January, February, and it went away. Now all of a sudden the market's heating back up, and now it's turning into something that is potentially something fantastic if you want to go non-contingent on an offer, right?
Yeah.
The point is flexibility is key. But the only way that you can be flexible is if you have the knowledge and the resources to be flexible in the first place. If you work with a lender, for example, that goes, yeah, I've got cash, conventional, or FHA, or VA. Those are the 4 things I can do. If you don't fit in these 4 boxes, sorry, I can't help you.
Wrong.
You're working with the wrong person. If you have a realtor that's also telling you the same things, yeah, I'm going to list your house and we're just going to advertise it as it's a beautiful 4-bedroom with a chimney and a backyard and a dog run. Cool. That's it. They're doing you a disservice. So work with the people that have the tools and the resources available to be as beneficial and valuable to you as possible.
Colin, you're up.
Yeah, I would tell you that my takeaway is we are seeing the market heat up, and the number one reason is because of creative financing. Knowledge is power. We're seeing a lot of people be creative of how they're going to buy houses, what their strategy is, and that's a big shout out to the combination between the lender and the agent relationship of understanding like all the possibilities that are at play and how they can get a deal done and how they can structure anything and ask for what they need, whether it be buy downs, whether it be bank statement loans, whether it be cash, whether it be like there's just so many options. And me and everybody sitting around here, we relentlessly try to figure out how to get any situation to work. And that is to just give you guys all the power to be able to do.
It's our job to figure it out.
Yeah, it's our job. And our answer, like my answer being the lender and like being the finance person, my answer is never no. It's just how and when maybe.
And that's huge because that's something you can't Google.
No.
He knows what he has. He knows what he can do.
Right. And we study this relentlessly, like I said. So whatever questions you have, definitely please reach out. Like let us try to find out whatever the solution is for you. And let us do our best and we'll go to the ends of the earth.
Literally.
Nice. So
The
Because
collective
as we
here.
found out, Colin is from Earth.
yeah.
At the beginning of the podcast. And
Salutations.
And so for my one rock takeaway, I agree wholeheartedly with everything all three of these guys have said, but I'm actually going to take it out of real estate for a second with my one rock takeaway. And I think the most important thing that I heard throughout all of this comes down to financial literacy and comes down to
100%.
you know, guys, yes, there's creative options. Yes, there's ways to do it. But if you don't have your systems in order, if you're not organized, if you start taking out loan after loan, you're buying a car that you don't need, these things are going to hurt you, right? Yeah. So start taking the time to learn about how your money works for you, where you can put the money, and how it works best for you. And as we've seen with the bank statement loan, as we've seen with seller financing, honestly, with all of these, having your money in order and knowing where it is, how it sits, is the most important thing when it comes into applying for a loan or finding out how you're going to finance your home purchase. So take it upon yourselves. Go online. I mean, go on TikTok, Instagram, whatever it is. Make sure
with
it's a
that
credible
said, I'm going to
source.
piggyback on that. How to use your home and real estate to benefit you.
Exactly. So just
I'll have a short on that.
take that-
leverage.
Yep. So just take the time.
Yep.
And learn about it and see, how you can best position yourself with your own monetary income or savings, debt, whatever it is, to put yourself in the best position possible.
Yep. So Colin, real quick, tell the people how do we get a hold of you in this amazing N.A.F cash offer or anything else that you qualify for?
Yep. So you can go ahead and Google Colin Keenan. I'll show up. New American Funding. My phone number is 720-202-5399. My email address is Colin, COLLIN, .Keenan, KEENAN, at acronyms incoming, NAFINC.com. That's nafinc.com. Whatever you guys need, I'm
Are you on
reachable.
TikTok, bro?
I'm on TikTok.
What are you
the
on TikTok?
Keenan Loan Zone.
Keenan Loan Zone, baby.
Loan Zone. That's
You know,
a
I
good
am-
one,
Loan
man.
Zone.
That's a good one.
That was very
good one.
bold. I will come up. I'm gonna Google you. I hope some old ass man.
I mean, that's
Yeah.
one hell of a headshot. I'll tell you what. I looked you up. It's
Yeah.
good looking.
you
Yeah.
Googled him. You were the first one that came up.
Well, Colin Keenan, New American Funding.
Dang.
Yeah,
Fuck,
you can
that's a
Google
unique name.
King
You-
Keenan. I will show up. That's
You Google me.
my little
you're gonna
arrogant
get all
side.
kinds of
Well,
stuff.
and I'll tell you what. We slammed you guys full of information on this one. So I mean, check out the time codes on the video just so you can go exactly where you want to go, because there is a lot of valuable information on this episode. But I will tell you what, I am very excited to go ahead and sit back and move on to our.
Before we do that,
Oh,
I want to do one shout out.
Go
Just
ahead.
one.
Shout out.
Because I know we have a lot of real estate friends and a lot of real estate community watching this, and please subscribe and like or comment. But this cannot be possible without that man. If you need any social media stuff, if you're an agent, Talk to him.
Yep.
He doesn't get the credit.
Phenomenal,
What we know in real estate,
to say the least.
by far, leaps and bounds, he knows about social media and how to
Making
promote
me blush
yourself.
over here.
Yeah, I'd agree.
I'm just gonna say.
we wouldn't be able to reach as many people as we could without this man's
Yeah,
expertise.
that guy's good. He's good.
But yeah, I'm excited to review this bourbon. Honestly, it's
You already know what I'm going to give it.
right. Yeah, well,
Roughly more than 3,
Jump the
less
gun.
than 5.
all right.
Two
So
rocks.
let's go ahead and move on to our bourbon review. I'll go ahead and start it off on this one. Where I do like the flavor, I do like this bourbon. It is a good tasting bourbon, but again, rating it against the 21 other bourbons that we've had, Oscar, I will 100% agree with you. I think I'm going to give this one. I'm going to give it a 5. I'll go a little bit higher only because.
So you 117% agree with Oscar.
Yes.
Yep.
Yes. I'm going to give it a 5 because
Wow.
where it
Carry the
does
one.
complement the
Jesus.
notes, right? Where it does talk about what it is and what you're looking for. It is still a young bourbon. So, and what I mean by that is the tastes aren't as subtle. They're very in your face. They're very punchy. They're very hitty. So if you are used to drinking something like the Smoke Wagon, like the Angel's Envy that we had, all of those are going to be a little bit more subtle, a little bit more fine, and I think they lend their hat to the aficionado, where you actually have to enjoy and know bourbon in order to enjoy it. Whereas this one, giving it its credit, it's flavorful. You're definitely going to enjoy it. And honestly, I would love to have this one on the patio on a bright sunny day, old-fashioned Manhattan.
Maybe I'm an
100%.
evergreen during a community tour. I don't know.
Yeah, yeah.
Just throwing it out there.
100%.
Community tour.
A golf game?
100%.
Can we
Yeah.
do a golf game?
Yeah.
I'll go. I gave it a 4.
Are you going to give it a 4?
I'm going to stick with my 4. A very tasty 4.
Yeah,
I
agreed,
have
agreed.
very bad things to say about it. It's good. It's very flavorful. Like Charlie said, it's in your face flavor. You do taste the honey. You do taste everything in there. And for me, my wheelhouse is more straightforward rye, straightforward bourbon, right? So if you're looking for the traditional old school flavorings of a rye, this is probably not your wheelhouse, but there's nothing bad I can say about this. It's 2 years. And with that said, it is leaps and bounds better than anything else that I've tasted that's 2 years. So it's a very, very good bourbon
You can
rye.
definitely tell that the person that made this understands it down to the chemistry level, 100%.
100%. So
Nailed
it
it.
is very good. It is good. I have. There's nothing that I can say. It's tasty. It's very tasty. Non-traditional, but very tasty. And I've had other bourbons. This is a rye, by the way, but I've had bourbons that are new bourbons, and they can't wait 10 years to put their product out, so they flavor them.
Yep.
I've had those. Garbage.
Well-
This is good stuff.
Exactly, and it's not syrupy.
It's not
It does
syrupy.
have flavor, but it's not syrupy.
It tastes the way it's supposed to taste, but the flavors are in your face. So if you're looking for tradition, maybe not. But if you're looking for something to hang out in the patio, have a couple pours, hang out with the guys, this is perfect.
If you have
and the price
friends-
is good.
If you have friends that drink bourbon and you want to be the guy that shows up with a good bourbon that you don't really know too much about, this one.
And it's
And
what,
price
$37?
well.
Price
Yeah,
point,
priced
I
extremely
paid
well.
$38 plus tax.
$38.
All right, Jameson.
Great stuff.
Yeah, I'm going to agree with you guys. I'm going to go with a 5. And only because, when I taste bourbon, I like it to take me on a journey, right? And I like if you have a
mouthfeel.
bourbon like this one that has a lot of different flavors, a lot of different profiles, I like a bourbon that is going to kind of walk me through from the sip to, tasting it, swallowing it, whatever, and letting it breathe. This one, I feel like it's great flavor. It just hits all at the same time.
Yes.
So it's hard for me to discern, well, is it the juniper? Is it the cinnamon? Is it this? Is it that? Because it all hits me at the same time, and then I'm left with the burn, which I like the burn because I like higher proof whiskeys. So if from a complexity standpoint, again, it's a younger bourbon, I don't think you get the story like you do the Smoke Wagon we had last
and
week.
To your point, I think the story is there when it hasn't been opened.
Correct.
When it has-
And as
that-
it breathes,
yes.
Exactly.
it just hits you harder with the
the flavor.
sweet and the honey and all that stuff.
I feel like it's everything all at once at the same time.
Too much.
But the everything is all very good.
Yes.
Yes.
Like it's not like it's a bunch of bad flavor profiles each of the same. It's a bunch of very good ones. I was hoping that it was going to kind of go through, like, you get the cinnamon, then it kind of dissolves into the sweet, then you start getting this honey, then you get the spice, then you start getting the juniper, whatever it is. It's all at once, but again, $38, great bourbon, and it comes from a state that historically hates alcohol.
Yeah.
Utah, you did a great job. Maybe
Fucking
don't
great job.
don't pull me over on my way to Vegas and empty my car out of my alcohol next time. Just throwing it out there. Utah State
Jeez.
Patrol,
All
looking
right.
at you.
Utah's just getting
right,
some
Mr.
major shade.
Mr. Thumbs up, thumbs down. Where'd you end up on it?
Oh, that's right. Your wife is from Utah.
Yeah, we're
That's right.
Utah's just
I
taking
forgot.
shots right across the bow. Utah,
And
hey,
you got,
you're great.
And
okay?
Utah, speaking of which, NBA Nuggets are in the playoffs. So I'm just gonna go talk junk about Utah right
Jazz
now.
ain't.
You got rid of Donovan Mitchell. You got rid of
Yeah, how did he do last
Gobert. I mean, geez, go Nuggets. Go ahead.
Yeah, go.
Sorry,
Nuggets.
Utah.
Sorry, Haley, but I'm just saying.
Sorry.
Hey, real quick, and I'm doing this for the viewers. For the people that maybe don't know what the One Rock rating scale is, can somebody give me just a quick
Yeah, so
rundown?
we do this and we say, hey, how many rocks would you put in this particular pour bourbon?
okay.
Because historically, right, if I'm a bourbon drinker, the less rocks. If it's a neat bourbon and I can sip it,
No rocks.
fantastic at 0 rocks. If I got to water it down, the more rocks, the more watered down, the worse the bourbon is.
So 10 is worse, 1 is bad.
we have had
the
for
brown
reference,
bag. The brown bag
Yes.
needed like.
I was at 12.
I'm just gonna fucking throw that shit away.
Yeah.
I was at 12.
There's
sure.
not enough rocks in the world.
I would have thrown it at
I threw
somebody.
Coke
Like
in
the-
that shit.
Yeah.
You combine them. And then,
Screw
All right,
the
we're not talking about
ice.
it. We're not talking
Screw-
about it. Moving on.
Screw the rocks. I threw some Coke in there instead of New Mix.
Yeah, no, of course. I
If
knew
you
all
do that bank statement loan.
I knew all of that, and that was again for the people that haven't been watching yet, and this is their first episode. So I'm gonna give it a 3. I actually was thoroughly impressed.
Yeah. No, it's
for a
tasty.
2-year.
It's tasty.
Yeah, 2-year aged or 2-year bourbon.
If you're a beginner bourbon drinker or a rye drinker, this is your
I think
jam.
we're on par though, because for the
It's your
most
jam.
part, right? Like us three, if you're listening, myself, Jameson, Charlie, and Oscar have tried 22,
22 at this point.
Yeah.
right? 22 bourbons. And so we're very picky. So it's fun to have somebody who has not tried the same bourbons we have to come on.
Yeah.
Because again, dude, we're bourbon snobs at this point.
Yeah.
We're forced to be
Little
bourbon
bit.
snobs.
You guys are
To have
vetted.
Colin come on and say, hey, you know what? It's a 3. I would agree with you because you haven't tasted what we
Yep.
tasted.
Yeah.
So somebody listening going, $38. What do I want to spend $38 on?
That's
A
tasty
bottle of
stuff for
Jack
$38.
or High West.
Oh, High West
no,
all
that's
day.
very
I'm just
good.
saying.
Yeah.
That's my
day,
point. though.
not even a
But a
question.
bottle of Jack is $39.
Yeah, this
Yeah.
is good stuff.
Right?
Because you can still mix this.
Oh, yeah.
It
100%.
tells you to mix it.
100%.
I wouldn't because it's tasty.
I would,
Oh,
yeah.
impressed.
I agree with your patio analogy, which
Done.
if it wasn't a goddamn hurricane outside right
Yeah.
now, I don't know
It's
if you
like
guys
the
can
wind
hear that.
here in Colorado.
I would say let's go to a patio and drink this, but
Yep.
yes, I agree with you 100%.
Nice,
Yep.
Colin.
Amen.
I like it. Thanks for the 3, man. That's
Yeah.
a good point.
3's
Yeah.
But again, you can definitely tell that somebody who understands the
100%.
deepest level
Yes.
of flavor and structure of it made this.
Every
because
sip, I tasted the periodic table of elements.
I like it. Ooh.
Wow.
Ooh. That should be a tagline. Ooh. Yes.
I know
See, we gotta
bourbon.
get paid
Ooh,
for this.
we
Right? High country. Taste the periodic table.
Taste the
Fucking
table.
high, yeah.
Yeah,
That's
taste
awesome.
the
table.
Taste
Well, on
the
that
table.
note, guys, thank you so much for joining us on another episode. Remember, like, follow, subscribe. Our episodes come out once a week, audio and video. Subscribe to the Mile High Perspective, living in Colorado. You can find us or you can contact us at resotr@themilehighperspective.com or
Phone number 303-578-0263.
guys, thank you so much for coming along with us. We appreciate you as always.
Cheers, everyone.
Like,
Cheers.
subscribe, comment.